Joining us. My name is Paul King, and I think I speak for the rest of the panel, who I'm going to let introduce themselves to you here in a moment. How thankful we are to be here today to talk about a topic that I know is very important to many folks, both in the room and here at the conference in general, and that's the topic of cybersecurity, and particularly cybersecurity insurance and the different aspects and avenues that's associated with that. Number one, I want to say that as we move into the presentation, we're going to look through a lot of different items. We're going to move quickly. We will be around for questions afterwards. This is a very detailed subject that requires a lot of nuance. So we're going to hit some of the highlights, and then anything that you have, at lunch or whatever else, we'll be more than happy to discuss. So number one, I'd like to have the panel introduce themselves. I'll start. My name is Paul King. I run the Management and Professional Services Group for USI Insurance, Inc., Insurance Services, and very happy to be here today. One of my overview items is overseeing the cyber and liability practice within USI, and there's some overlap, as we'll see, among some of the different lines of coverage when it comes to corporate responsibility, and we'll talk about that as we get farther into it. But now I'd like to let the all-star panel here introduce themselves, and we are very fortunate to have who I consider to be luminaries in the space. So go ahead, please, John.
You overstate the case, but John
Maybe.
Mullen, I'm a lawyer. I have a firm, Mullen Coughlin. We do nothing but handle data privacy events. So we will be on the receiving end this year of somewhere in excess of 1,000 first calls from companies who have had a problem or are having a problem that day, that minute, that hour. So that's what we do, and then we take it through a whole process, which we're not going to do now. But anyway, that's who I am.
Good morning. My name is Matt Ahrens. I co-founded a firm called the Crypsis Group. We are a forensic investigation firm, kind of in support of John and his team. We do a lot of work with John's team. I'd say we've done roughly 300 engagements year to date, and we really are focused on being fast and providing a high-quality service to our customers.
Hi, everybody. I'm Peter Hedberg. I work for NAS Insurance. We've been writing insurance for cyber risk for about 10 years now, and I'm the regional president here for the Northeast.
Thanks, guys. So let's start and jump in to what we all know is happening right now, which we are in a cybersecurity war. The four of us up here are veterans in it. I have no doubt that there are many people in this room who have also experienced what's going on right now, and it truly is a war. What we're seeing is more enterprises, more insureds, more of our clients across the board we're engaged in an asymmetrical hybrid warfare, multiple threat vector situation. Now, that being the case, there needs to be multiple ways to address this threat and address it successfully. Some of the items that we're seeing here that we've been seeing in the news recently, we all know about Equifax, right? We all know about the breach. We all know about the compromise of personal data. The decline in stock price, multiple class actions, security and other class actions, along with the CEO who is no longer the CEO. These things tie over into directors and officers and other types of insurance that IT and cyber risk rarely touch, or at least had rarely touched up until about the last decade or so. We're now seeing these things come to fruition. Some of the emergent cyber attacks that we've talked about, and data targeting 3.0. I know when we talked about this earlier, guys, on the 3.0, the Lloyds breach and going after, we've moved from going to credit card information and single vector type of information, single value, to full identification. We'll talk about that here in a minute. Matt's going to talk about where we've moved from, to now the Lloyds breach, where you're targeting the trade secrets of multiple types of corporations and seeking, whether it be ransom or other nefarious means. So what are these events? And reputational harm, of course, and we'll talk about this later in the presentation as well, has become a big issue. And it's kind of 2017 is the year it kind of broke from a risk standpoint, when we now understand the impact that companies are facing from a breach event, cyber event, ransomware event, and how it affects customers' perception of them. And I think it's important to note as we walk into our presentation here, what do these events have in common? The amazing thing is that everything we've talked about here, the Equifax issues when it comes to the breach response, when it comes to the liability suits that they're going to be facing, some of the emergent cyber, whether it leads to bodily injury from dam sluice control late last year, to a ThyssenKrupp plant, 3 or 4 years ago that was destroyed to the tune of about $55 million in a property incident that was started by a cyber attack. There's going to be things that are going to happen. All of these things would have been covered in some form or fashion by a well-constructed cyber insurance policy. And these gentlemen right here would be critical as far as the service providers of addressing that issue under a cyber insurance policy. John?
Yeah, so my job here is just to sort of sensitize you guys to how this all started, right? So in 1995, did anybody in here get a letter from any company saying, hey, we may have lost your data? Of course not. You know why? Because there was no law requiring it. So companies have been gathering data for years. Most of us, when we got out of school, our first proof of insurance card had our Social Security number on it. So, I mean, but that's just the way this country grew up. So you take that background, and I challenge most companies. I mean, it's not an exaggeration. 1,000 cases this year. We've handled over 5,000 in the last 15 years, and that number keeps going up per year, as you can imagine. Very few people, very few companies can answer those top questions. Despite the brilliance in the IT department, despite the thoroughness that everybody tries, with technology changing the way it does and people being creative and going around rules and policies and controls, those are extremely difficult questions to ask. And then you overlay that with the bottom of the page, which is a bunch of different laws throughout the world, throughout the states that are, to say a mishmash is an understatement. And on top of that, what I don't have here and should have put in at the very bottom is contracts. 5 years ago, very few people put anything in a contract. Now they're kind of sticking it in, but they're not really sure, but it's better than nothing, right? So who's defining what in what contracts, what duties flow which way, what data is protected, what's not, et cetera. So we're going to pop the next slide.
Absolutely.
So this is just a quick example. 48 states in this country have different laws, 48 of them. And it's not where your company is located, it's where the people live whose data you possess, or whose data you have access to, which is different. Not only that, so you have to crank out the letters if you have a data breach where you can't prove you didn't lose it, and there's a sort of an affirmative duty in many cases. The other thing is, in about half of those states, you have to raise your hand and tell the regulator, hey, not only did we just mail letters to 10,000 people in your state, we're now telling you we did. So now if you'd like to pick on us and ask questions, we've now teed it up for you, but you have to do it. So that's a challenge. There's all kinds of different rules in terms of timing. Some are out, some are days, some are weeks, some are months, some are undefined. Like, what does without unreasonable delay mean? Right? I'll tell you what, in Indiana, it means 30 days. You go 31 days in Indiana, you violated their statute. Does it say 31 days anywhere? No way. You just have to know.
And a lot of this comes out of confusion, correct, John? A lot of this comes out of Tennessee, for example, where, in the span of, 8 months, they went from, we have no safe harbor from encryption, and then we go to...
Yeah, I mean, this is just a slide for states that have changed their laws in the last 12 months or so. If I gave you one that said 18 or 20 months, there'd be 3 times as many states up here. So what you have is you have brand new law, meaning in the last decade. Virtually no judges have gotten their hands on this law to interpret it. What does event mean? What does notice mean? What does compromise mean? Like those kind of terms. So no one really knows what half these words mean. The laws are new. The enforcement is different state to state. The laws keep changing. So you have new laws and they keep changing them. And you have no interpretation by courts. And you have no clue which regulator in which state from which party will have on any given year, an excited attention span for this particular spot, and then disappear. Guy in Connecticut brought all kinds of lawsuits. Now he's a senator. Funny how that works.
It's amazing how that works. And also, would you say that there is a varying level of severity amongst the different AGs, amongst the different states, and how they view going after or enforcing particular laws on the books? And we're seeing, so that makes the patchwork even more difficult.
Well, yeah, that's right. Because, like, for instance, Connecticut, Massachusetts, Indiana, Washington State, California, those are states where you really don't want to deal with the regulators. I would say in the 1,000 cases, 75% of those cases will involve some level of inquiry from some regulator in this country. Are they going to, kill you and hang out to dry? No, they're going to ask questions, and they're going to require effort and thought and work and money to respond. If you pick a fight with them, then you just bought yourself a much bigger problem. So unlike litigation where you sort of fight the other side hard and get respect, in this context, you treat them like kings and queens and hope they pick on someone else.
Absolutely. And I want to go back to one thing real quick on the previous slide. And Matt, I know you had mentioned, and picking up on what John had said, even what we're here to talk about today, and something near and dear to the heart, with on the Department of Financial Services, a specific example of some areas where you felt, there could be some ambiguity, and that's something that's going to have to be worked and refined as we go down the line.
Yeah, definitely. Speaking to some of the encryption requirements, most of the time when I see encryption, I see notification or some kind of control around the encryption key. I saw ambiguity in that, which I don't know is a good thing or a bad thing. I think we need to see how it plays out.
Sure.
The other area was in terms of notification to the superintendent within 72 hours, that kind of towards the end of the requirement. It requires notification for an event, and it does give some guidance about what an event is, but generally speaking, the term event to me does not mean anything bad has happened. You haven't confirmed that there's been an incident yet when I say event.
Right. No, thank you. That's great. That's
and handling those cases and having done notice already under that very new statute, we've had times where we've done notice and times when we haven't done notice to them because we don't really know yet if any data was truly compromised. Sure. Or if just there was an event in the system, which would bring these guys in and they ultimately say, no harm, no foul. Okay.
And to your point, John, and I think it's important for the audience to understand as well, that if you were to trigger a note and say, hey, this was breach and there was not a breach,
right,
then there have been incidents like that in the past. I can think of 2 healthcare clients that we've handled where that's happened prior to our group, our specialty group being brought in.
Yep.
And it caused, and we'll see when we talk about reputational harm,
yep,
a drop off in revenue for the hospital because people weren't showing up after the event, which did not happen. It was not a noticeable event.
Quick story, we had one case a year ago. The CEO called us. He'd already done his internal IT review. They were prepared to mail 150,000 letters. They were ready to go. They had the contract set. They were going to spend all in, $500,000 in that effort, et cetera, offer credit monitoring. We brought in, it might have been Matt's team, and after $50,000 of forensic work, they did the letters. They mailed 11 of them. So think about it, right? So it's money well spent. All of which, by the way, to Peter's point, was covered by insurance with like a $5,000 deductible or something. So when you look at the spend there, what could have been and what was, it was all because someone said, pause. And in that case, they called the broker who said, well, before you do that, maybe you should talk to John's team. So on top of the complexity of states, let's bang to the next one.
And now we're into the federal regulations.
So, and again, anybody try to get a hold of this, right? Depends on
notice
what.
that note at the bottom, as John's talking about there. This is a sampling of
not
the federal
all of
regulations.
In fact, I go to these conferences where the plaintiffs' attorneys are talking, and they throw up a new statute every time. They're 50 years old, and they had the word data in it from 1971 or 1966. Like, oh my God, another one. I mean, they just look for those statutes, right? So try getting your arms around this, and this, as opposed to geographic, is industry-specific stuff. The hard one, the big one, is HIPAA, but you have to be actually covered by HIPAA for this to matter. So you can lose data, and it can have diagnostic stuff left and right, but if you're not a covered entity or you're not a business associate, you don't have a HIPAA problem. You have a state law problem, but you don't have a HIPAA problem. So that's why sometimes you see states re-engineering their wording and their statutes to say, oh, by the way, we do medical too, because there were big holes in that enforcement area. Here's the one example: OCR, Office for Civil Rights. I can't figure out how that's a HIPAA enforcement agency, but those guys are the ones who enforce HIPAA. They came out a year or so ago and said ransomware is presumptively a noticeable event. Think about it. That means the minute you have a ransomware event, according to the OCR folks and the written guidance they issued, you probably have to do notice. Regardless of the fact, and this is where we disagree and we've worked through it, we've brought these guys in a number of times, and they get the code, they reverse engineer it, and they say this code literally didn't have the capability to see, to copy, or to export. Well, I then take that and I wrote the memo that says, well, guess what? No duty to notice under any law. But you've got to get that report. If you come in and somebody had wiped it all beforehand, these guys are frozen. They can't recreate logs that are gone, right? So,
no, I definitely have a thought, and it's definitely something we run into on a regular basis from a responsive perspective, where the responders will go in and they think they're cleaning things up. So they'll delete profiles, or they'll remove systems or rebuild a computer, and it ends up hampering our ability to make that assessment and give John the tools he needs to protect the organization.
And without getting
Good
too
point.
deep into the weeds on that issue, when that guidance came out, if you actually read it as a lawyer, it's internally inconsistent the way it uses its own definitions, so they have no idea what they're talking about.
And it's simply, and I hate to say, use a technical term, but it seems like the OCR is trying to help the healthcare companies, business associates, CYA in case a breach is necessary.
Yeah.
Breaches happen.
Yep.
Absolutely.
Yep. So anyway, so there's lots of complexity to the federal. The question I'm asked frequently is, will there be a national data breach law, like the state law writ large? And the answer is probably not. A, it's the wrong administration for that kind of thing. And B, you had 47 state attorney generals a year and a half ago write to Congress, and it said, in essence, don't tread on me. It said, if you pass a national law, do not pass a law that vitiates our laws. So you go ahead and pass one, but it can't make our laws unimportant or non-applicable. Much like HIPAA. When you have a HIPAA breach, you also have a state law breach. So the short version is, even if there is a national law, it will be in addition to, not instead of, the 48 laws.
Absolutely. And of course, and I want to keep us rolling because we got a
Yep.
lot of stuff to get through, but the SEC has made it very clear over the past couple of weeks that they are going to be stepping up their enforcement activities as well. Public companies in particular, especially
Not to mention their own security.
and their own security. I was just going to say, public companies in particular need to not follow the SEC's example and move forward with a more secure network.
Yeah.
And
So-
some real world examples here.
Yeah, and short version, don't worry about the math here, but you try to draw a correlation between number of records lost and the fine, and good luck with that. We've got $533 on top per record. In the middle, it's $47 per record, and below, it's $568. Who knew, right? There's so many variables. The one I didn't have up here, iPhone lost, Archdiocese of Philadelphia, 482 records. How bad can it be? $650,000 fine for an iPhone that was lost. Never reported to have misuse of any of the data. Not that that matters, but I mean, you can't really guess, and it really does depend on how well you massage regulators. There's a question over
Your
here.
question, my friend?
Going slightly beyond the scope of the panel, do any of the laws now provide criminal penalties?
I'm unaware of any law providing a criminal penalty for what I would call a civil problem. Meaning these are, you lose data, it doesn't make you a criminal, it makes you less than perfect. So I'm unaware of any law, unless there's a willfulness or a maliciousness, which is a different thing. So one concept that has been floated is some kind of misdemeanor, low level thing, for that, but I don't know how that would ever work.
More along the lines of involuntary manslaughter.
Good luck with that.
and by
I
the
mean, I
way,
don't think it's going to happen.
The involuntary manslaughter piece is an interesting point because of the
Yeah.
way the bodily injury over the past 2 to 3 years has been refined as a potential coverage within cyber. There are I'll keep this brief, but it's a great question. And initially, what happened? You had full bodily injury, full property damage exclusions under cyber contracts. Now, what we've been able to do is, and that was based upon arising out of attributable to anything related to any bodily injury that had an inciting incident that involved a cyber type of a breach or incident, whatever the exploit, whatever the case may be. What we've been able to do now within the industry is narrow that down first and foremost from a broad form language to for language. So it has to be a direct, so it's for as opposed to based upon, arising out of, or attributable to bodily injury. Now it's for bodily injury. And what we've been able to do with a lot of our trading partners as well is now grant either sublimits for bodily injury type coverage, so $1 million here or $450,000 here, construction firms and others who may run into that manslaughter piece or injuries. It's a great question, and it's something that's evolving rapidly. There is coverage in the market. It depends on how much you want to pay, and it depends on the type of risk.
Yeah, my last comment here, if you flip to my last slide,
Sure.
is you think the United States is complicated? Look at the rest of the world. Right? Try to figure that out. 72 hours notice throughout the European Union. They can fine you $20 million or 4% of your gross revenue, whichever is higher, not lower. Think about it. So we have no idea how any of this is going to be applied. So the mishmash that is the United States is relatively organized compared to the rest of the world. And the reality is this: most companies of any size have data from people all over the world. And people, they don't have to be citizens. If I leave my home in Philadelphia area and I move to London, then I'm a London resident, and the company that loses my data in Wayne, Pennsylvania, has to deal with the new UK law. So that's a very complicated thing. And I'll kick it over to the other guys.
Excellent. So now we get into cyber risk, emerging threats and risks from an IT standpoint. And obviously, I don't think it comes as any surprise that something new is happening every single day. I know there was a reference made in the earlier keynote speech in regard to what may very well be the first truly airborne cyber virus that, over about 3 weeks ago was discovered in a lab setting. It is a very interesting and scary time to be involved in this space for any organization that is doing anything with any kind of network computers or employees. So we mean everyone. And Matt's going to run through some of the emergent threats that we're seeing right now. Matt?
Yeah, sure. Thank you. Thanks, Paul. So a lot of what we're running into, I would say, is you could almost say the expansion of cryptocurrency has directly driven a lot of this market and the availability and kind of the acceptance of that as a currency. So I mean, you look at Bitcoin, that's the 800-pound gorilla. But there's also Ethereum, which is rising up, and that's another powerful currency. And there's also other currencies, which I was talking to Paul about last night. So like Zcash, for instance, which differentiates itself from Bitcoin in that it's a private ledger, whereas Bitcoin has this public ledger, and you can kind of track and see where money goes. So kind of to that point, Bitcoin itself is not anonymous. You may not know where you're sending money at any given time, but in order to put money into Bitcoin or take money out of Bitcoin, you have to provide identity. So that's kind of an interesting piece, and that kind of rolls into how these criminals will monetize their assets or monetize the information that they've stolen. They'll go online to forums like dark web forum markets and forums and things of that nature. I mean, the one somewhat recently that's popped up and got taken down was a forum called Alphabet, which had some interesting assets regarding its cryptocurrency, which I can talk to a little later. But really kind of if you look at these forums and if you look at these markets, the price of the identities or the fulls or the information is going down over time.
And that's because of the amount of frauds that can be committed, right, Matt? So a credit card, it's one fraud. It's a credit card piece of information that can be used as fraud. But if you get a fulls, you're looking at, I think, no fewer than 23 and up to 30 plus types of identity theft from a full identity that you can use.
Yeah, absolutely. And then the other piece of it is the market's becoming flooded with this information, with this product. So the supply and demand.
So multiple frauds from multiple sources are possible.
Yeah.
Okay.
The other interesting line here is it's becoming easier to become a cyber criminal. I'd say this is most apparent inside of ransomware. I don't necessarily know how new this concept is, to be perfectly honest with you. I mean, we've seen this in terms of botnets and ZeusBot, and you can go buy an attack platform. Where we're seeing this most commonly from a ransomware perspective is when we help customers kind of respond and recover from getting hit with ransomware, we'll see kind of the same scripts being followed by the threat actors inside of our interaction with them. They have the same broken English. It's almost like they copied and pasted specific strains. You always end up using the same kind of email provider, even though it ends up being a different person. So a lot of these different random details kind of show trends kind of in that crime as a service. There's also ransomware as a service from a Satan perspective, if you're familiar with that one, which the model was the person who deployed the ransomware ended up sharing the profits of the ransomware with the person who wrote the application. So rather than buying an application, you subscribe to it, and if you win as someone who's sending information out or collecting the ransom, you split some of your profits with the person who wrote the code.
Absolutely. And I think, one of the takeaways here before we move on to the next slide, and I know you and I talked about this, Matt, was the difference. We're all hearing about ransomware, right? Ransomware this, ransomware that, et cetera, et cetera. Do we pay the ransom? Do we not pay the ransom? Ransomware is not new, as we talked about. However, there are two different types, and I want to make sure that we don't use those interchangeably, which is ransomware where data is actually exfiltrated, where data is taken and then used to be held to ransom. So Ashley Madison, for example, with not releasing the names and seeking the ransom that way, versus a software-based network shutting down type of attack. And one is typically more severe than the other. It's probably not the one you'd think, right? It's the old school, the grab of the exfiltration.
Yeah, absolutely. It's much more traumatic for the organization as a whole. I mean, had to have someone come out and say, "I've got your data. It's for sale. Pay me pay me money. And usually when they request funds for that, we're talking in the millions of dollars. When we're talking about some kind of ransomware, kind of encrypting files, we're talking anywhere from 1 to 30 Bitcoin, kind of in that range. Whereas these guys are asking for a lot more money.
Yeah. And so the next thing, we talk about the emerging risks, and I think it's important, and we talked about a little bit this about Matt, what are we, the rogue employee side and, the threats that they present. Is that something you're getting more and more into and seeing more and more of in the work that you're doing?
Yeah, we definitely see rogue employees. We've seen maybe poor controls on an organization that didn't cut an employee off that had left. We've run into cases like that too. They're very impactful. They're very stressful for the organization. Similar to that, someone's trying to extort you for your data type of case. The access that they're granted, the level of risk they impose is definitely higher than someone on the outside.
Interesting. That's very interesting. I think it's important for everybody in the room to understand that. The other thing I think that's important is employees are one major area of weakness that are hard to address because they can't be technically controlled per se. They are their own agents, their own actors. They're going to do things that are unpredictable. They're not machines. So another layer of complexity there would be, and Matt, you tell me what you're seeing here as well, and share with the audience the auditing not only of employees but vendors and the access that they have and how that works, and where we're seeing more and more threats pop up. We all know about Target and Mr. Fazio and his AC business, and that's a famous case, and that's fantastic. However, the real risk, though, is going to be more contract-based, and it's going to be more your everyday vendors. Is that correct?
Yeah, absolutely. And I think this is amplified by the shift to cloud services, mainly because the availability of information is so much greater, and you're very much tied to those authorization authentication rules. Whereas, traditionally you've got your data inside of your four walls. It's much harder to get into. When you start moving your information into a cloud service, into an Amazon S3 bucket, into a third-party service, it becomes much easier to access.
Yeah, I'd say about a third of the cases we see involve a vendor. Either we represent the vendor who then has to deal with hundreds of clients whose data it compromised, or on the other side, the vendor compromised and we have the client. In fact, my own firm uses a health benefits firm where they lost the data. So we had to do notice to our own firm that everybody in it, and that's what we do, is data security, but it wasn't our fault, but still, 5 years of credit monitoring, we did it immediately.
It's amazing. No one's immune.
And I told them all, I'm going to be using it as an example out there in the world. And they said, you shouldn't do that.
What was the name of it?
Yeah, can we get a discount on services? Yeah. Yes, right over here.
So you talked about rogue employee on the inside of threat. Have you seen any cases where somebody is working with somebody on the outside to kind of send them an email, like a phishing email, to say wire this money, but they're really working for someone on the outside?
And colluding together. There's, John, I'll let you tackle that on the case side first, and then I can jump in from the
The
insurance.
answer is, have we seen any cases where there's collusion between the bad guy sending the phishing email and on the inside? Not that we can prove. We've had some where we have our doubts, and we look, very hard at a couple employees, and maybe they keep their job down the road, or maybe they don't, but by which time I'm gone, frankly. So no, we haven't proven it, but I think there's been 2 or 3 cases where we think it happened.
And from an insurance standpoint, there are provisions within the policies that state, if it is in collusion, in some policies, not all, that if it is in collusion, then it's going to be kicked out, that it has to be completely independent. It straddles a bit of a line between crime coverage with traditional coverage, where if you're working in collusion with someone else, then that is considered to be covered. Whereas in the cyber crime space, in particular, there's a few contracts that have language that's broader than that, but most will kick it out if there's a collusion element. Absolutely. It's a great question, by the way. Absolutely. Sorry? Well, the insurance company is going to conduct their investigation of the incident, and they're going to look around. But to John's point, especially when it comes to the social engineering aspect, it is exceedingly difficult to prove out, because all you really have to do is cover your tracks from an IP standpoint, and all hint of collusion is pretty much gone.
The good news on the coverage issues is it's a soft market, and everybody's trying to sell into it. And the last thing the carriers, and Peter can chime in here, he's laughing.
Stop calling it a soft market.
The last thing they want to do is get a reputation for denying claims. That's not what they do. We work on the other side of that. We're the guys spending the money on their behalf and on your behalf. But it's a very rare instance where we run into those kind of coverage issues. I mean, right now it's get it fixed, get it done.
And they don't want to be the odd man out in the market that's known for doing that.
Yeah, not to mention if you piss him off, you might lose all the business that he
never
otherwise would
happens.
place with your insurance carrier.
That never
Think about
happens.
it.
I'm always calm and cool. You know that, John.
Yeah, of course.
What kind of requirements do you put in the contract for the company buying the insurance for the cybersecurity insurance? What kind of controls or insurance do they have to provide to you?
Peter, you want to talk about that a little bit?
Yeah, so there's kind of two sides to the equation. There's what we put in the policy, and then there's what we underwrite. What we underwrite are the questions we're going to ask, and then the policy is going to be issued based on whether we were comfortable with that. So a lot of the things we're going to ask about callback procedures. Do you have one individual handling accounting? Like, can the same person that issues a check, can they reconcile the accounts as well? In other words, what are the different vectors, and then what are the different controls in place so that when money leaves the door, at least 2 or 3 sets of eyes looked at it and verified it on its way out. You would be shocked at how many businesses in America don't have that and are victims of this crime all the time. Now, on the policy side, some insurance companies will try to exclude it if you didn't make that call. We've decided not to do that. To John's point, to be competitive in the marketplace, that's really not a good thing for us to do. So I can't think of any other major restrictions. In some cases, if you're duped into buying a bunch of inventory that somebody steals, some insurance markets are excluding that because it wasn't money or securities. Again, we have decided not to do that. We'll pay for the inventory. It's monetized. It's goods either way. So.
I'm mostly interested in cybersecurity breach. Do you sell cybersecurity breach insurance?
Oh yeah, absolutely. We're going to be getting to that.
What kind of requirements do companies for cybersecurity breach?
We're actually going to get into the underwriting aspect and the questions that are asked during that process. So it's a great question, and I can say, just as a little preview teaser, what we do is we make sure that there aren't exclusions in the policy around when did you patch last? When did you when did you upgrade your systems to this level? That traditionally was in the market up until about, heck, some forms still have it. But 2 or 3 years ago, we started to really push back and be able to negotiate out those types of questions about what are you doing from a very particular IT standpoint, because carriers are coming back and saying, no, you told us you updated every 30 days. This didn't go until 90 days, therefore claim denied. So I think that's kind of where we're looking to, and we're going to get into that here very shortly. Great question, by the way. Moving right into that then would be the last slide on the emerging threats and risks. And Matt, your thoughts here on some of these items.
On the Verizon side.
On the emergent, we're on the attacker timeline and the Verizon breach and some of the other items there.
Oh yeah, absolutely.
Yep.
Yeah, I mean, I think some of the biggest pieces to bring up here from a timing perspective. Most people don't know when they've been breached. Most people don't have that visibility onto their systems and their networks. I would say, we were talking about this before, I was saying kind of in the 3 to 9 month range. Maybe I'm being generous. I mean, I think Peter may have, or Paul may have a different.
We're seeing now, to your point, 3 to 9 months for large, sophisticated firms with a centralized risk management and a focus on IT reporting. It's more like over a year to perhaps 18 months, and it's typically a third party who informs and of course the majority of firms in the U.S. are middle market firms, and it's usually a year to 18 months until a third party confirms that yes, you've suffered a breach, your data is out there, and it has been exfiltrated. And that's the scary thing about it. And then also, if you look at the third bullet right there with the Yahoo Verizon deal, this is very timely because yesterday we found out that it wasn't 1 billion accounts. It was all 3 billion accounts that were held. Now, the financial impact on something like that can be absolutely, we know it was worth 350 plus on deal value that was lost during the transaction. Now, this may very well go back and turn into a reps and warranties issue and lawsuits around what did you know, what didn't you know, and now you've affected the value of my purchase.
And so was the 350 based on 1 billion or 3 billion?
And by the way, if it's 350 times 3, then they're in big trouble on that one. And they didn't buy enough reps, I can tell you that.
Yeah.
So that brings us into the insurance piece. And so just as a note, and I think this is important to discuss what are the top 4 threats that we're seeing our insureds face today from an insurance standpoint and hitting against the claims and policies. Number 1 are breach events. Obviously, still headline, still number 1, unfortunately, and still a very, very viable system of raising money for cyber criminals. And you can see some of the stats there. The ransomware and cyber extortion issue, we talked about those a little bit. That's number 2. Ransomware is the most widely used form of modern extortion perpetration. The exfiltration is worse, as Matt mentioned, but as far as just attacks rolling through, I think, Peter, you and I talked about this, 90 plus, on an average in the U.S. So it's quite an attack every day. Cyber crime, we talked about social engineering a little bit earlier. That's actually, social engineering is a big one. Spear phishing, especially when you look at the DocuSign breach and going after clients and what that does to a company like DocuSign as well as their clients. That's an issue that we've found coverage for in the marketplace. It's very limited, but it does exist. And then, of course, the hack, and it's very, and Peter, we've talked about this before and how valuable that can be. And then, of course, on the hacking attack side, that's different than a breach. And a hack is not going after particular items per se, but they're in there to cause as much damage as possible. And what we're seeing now is business interruption is starting to move to the fore. Companies are starting to understand the broad form nature of cyber insurance. And what they're doing is they're now starting to report their claims for business interruption, and more importantly, contingent business interruption. Going back to that vendor aspect that we talked about earlier, whether it be your cloud provider, whether it be your payroll provider, that suffers a breach, that brings your network, your system, your information down. And I think the important point to mention there on a couple of the hacking attack, and as we wrap up the top 4, these are all issues that cyber insurance can address. That me, in placing and negotiating to figure out what you need and working in conjunction with John and Matt and Peter, and they will all be part of the process to make sure that these issues that we've just outlined here, the top 4 threats, are covered and covered correctly by an insurance policy. It truly is a risk hedge, and this is the financial hedge. We'll talk about the risk hedge. What's important to note, you're not going to find cyber coverage under first of all, especially the first 3 that are listed here, E&O, property, and general liability. Crime may actually cause more of a problem for your organization if it's not structured correctly, because many carriers are hiding a little social engineering coverage grant now in their crime policy. Most of the claims-made policies, they have primacy language, which says that if a claim comes in, we will be excess of anyone else who covers this claim. Well, the other policies have that same language. So everyone's pointing a finger at each other saying, no, it's yours, while you're stuck in the middle paying for, however much it was, 400,000, 800,000, $1,500,000 that went out the door.
And I can add to that too on the crime policies. Anytime you see an insurance company put out a very small sublimit on a policy, that means they don't want to cover it because they're making it abundantly clear this is all they're going to pay. And so it makes it even harder.
Absolutely. No, that's a great point. And yes. Mm-hmm.
Is it possible that security behind it actually follows behind every time they update it? Because I know this is like when insurance companies using software to track your clients, or either we make appointments. Mm-hmm. I started seeing like they send in somebody else's information to your account, which kind of get me kind of scared.
Sure.
It's like when I log into an account after they just updated, like the application was just pushing our software. When you get in the apps, it's like I was kind of curious. I showed the doctor that they put a client into my system.
Yeah.
And
without your knowledge and without the client's knowledge. Absolutely. That pushing down of information is an area, it's a great question, by the way, is an area that we're seeing more and more liability attached. I know, John, you're probably seeing more of that, auto population, autofill, especially on the medical side, opening up doors to, you should not have released that, even though it was for convenience, even though I signed up. Right. You're now in conflict with a number of different laws around privacy.
Yeah, I mean, the short version is companies gather, use, and secure data, all 3. Right, and then the focus in the United States has been on the security side, but now there's a growing focus on the gathering and the use and what's proper and what's not, and how they disclosed it to you or didn't, et cetera. And whatever you checked 5 years ago, does that still apply today to what they're doing? And there's a whole nother area of law.
And it's really where the liability is going to flow. And we're talking about breach costs, we're talking about ransomware costs, we're talking about all these different things that are headline items. But what we're seeing now is the defenses for liability. So someone's suing because they were harmed because of that, not a breach, not anything else, but because their information was given out incorrectly, and perhaps along down the line, a lot of the defenses, we talked about Spokio, we talked about some of the aftermath of the Talk.
Yeah, I mean, it's harder to defend those cases now than it was 5 years ago,
Absolutely.
and 5 years from now, it will be even harder.
Absolutely. So that brings us to where we are in the modern base form, and not spend a lot of time here because it's information dense, and I'd be more than happy to talk in detail when we can break these coverages down and have a little more time. But the first party costs, I think it's very important to note, those are costs that you have incurred. So they really truly are first party costs. You incur the breach notification costs, you incur the business interruption, contingent business interruption, those kinds of things. The third party area is where we're seeing more and more activity, and that, to John's point and what we were talking about earlier, about more lawsuits, more standing being granted as clapper defenses and others fall by the wayside among several districts. And also, we talked earlier about the state AG investigations. These are all things that are going to be covered by a cyber insurance policy if constructed correctly. I think that's important to note.
And one thing I'll point out, and this is what's unique to cyber insurance, is if you have that policy and you have that event and you call one number, an 800 number given to you by Peter's our company or any number of the insurance carriers, here's what happens that would never otherwise happen for you regardless. You get on the phone with us in a half hour, I get him on the phone 20 minutes after that, and within an hour and a half of you actually figuring out you had some help available, you've got remote forensics already in place under attorney-client privilege, bang, and that includes Friday night of a holiday weekend through the Christmas holiday. You can't buy that anywhere else. And that expertise is there because the cyber insurance insurers have figured out over the course of 15 years what companies are able to respond and are nimble and have expertise. And that's something that's really unique for this area.
And it's almost like we planned that, because that segue is beautiful into this. Yeah, Peter, what do you got?
Yeah, so I was going to add to that too. It's a little like your health insurance. The health insurer has pre-negotiated all of the rates with the doctors and the different providers and all that stuff. So you don't need to think about that. So when you go without this insurance and you call these guys up and you get the retail price, obviously it's going to be more expensive and there's going to be no coordination between their services. So that's one of the things that the insurance does, is it ties it all together so you have one team and one solution.
Absolutely. And here's some of those solutions. So it's not just coverage. It's not just monies being paid in a lawsuit or defense costs, whatever the case may be, but there are actual services that are provided on a pre-incident basis, making cyber insurance a true risk hedge, especially when it comes to cyber risk training for employees, trackable, scorable training that can show where the weaknesses are and where more work needs to be done, because again, humans are the single greatest threat vector for this. There's also threat simulations, threat response resources. These are all things that we negotiate into your cyber policies. And then customized solutions can include, helping out this group here, helping out understand where weaknesses are in vendor contracts, what they should be evidencing to you, how that liability should flow. And then, of course, we call these, the second piece, the post-breach side, and those services, those built-in breach response services. In reality, especially when it comes to the forensic firms, attorney work, those kinds of things, whether it's a ransomware event or any other event that requires some kind of a service provision, that's already going to be included in the majority of cases in your cyber liability policy. So that's a true financial hedge as well. The average spend is about 4 times greater in the open market than what you would spend to have Matt come in or John come in on the panel side, because those have already been negotiated with the carriers. Is there a question over here?
Yeah, one thing that keeps popping up in my mind is reputational risk.
Yes.
Because obviously companies have reported these things sooner, the public would not be as angry.
Yep.
And they would be able to communicate better the value of what they tried to accomplish in remediating the issue. So just wondering how you handle that aspect, because I see that as almost double-edged sword to the actual event itself.
It's, we actually are moving into the underwriter's view, and Peter's going to touch on that on the reputational side.
Did you plant that question?
I did. The quick answer, by the way, is reputational harm is available. I don't want to go into the algorithm, but it's most certainly something that we have in place right now and can secure, and it's absolutely the next big wave of loss. And you're right, and we'll talk about it afterwards.
So this is underwriting. This is getting to the question in the back there. These are the things that I'm asking about. Typically, they're on an application that you'll fill out and then submit to me through an insurance agent or broker. The first three are pretty obvious. IT controls. I mean, we're really moving beyond just firewall, antivirus, and stuff like that. We're moving into higher level encryption, segregation of data, and that sort of thing. That's what we're seeking. Regulatory compliance. Do you know that you're subject to HIPAA? Do you care? Do you actually have a HIPAA policy? A lot of people say no, and you'd be surprised. They're supposed to say yes. Governance, outsourced vendors. This outsourced vendor is an enormous one for us right now. As our product continues to evolve in the marketplace, we are being asked to cover when a vendor goes down because of a cyber risk and it impacts your business. Even though nothing happened to you. So a good example is Maersk. We're going to pay a couple of claims on that, it looks like. It's a large shipper. They got hit with PETIA. And I didn't think that all these businesses in the United States were that dependent on Maersk to get some of their shipping stuff, but now I'm paying some extra expense claims.
Absolutely. And I think the reporting piece on that is very similar to the reputational harm piece, Peter. You tell me if I'm wrong there, where most folks still don't have a sophisticated enough understanding that, yes, there could very well be coverage there for that kind of loss.
That's right. Yep, absolutely. And while that might be good for me in the long run, I think that brokers are getting very, very good at making sure that these policies are negotiated in such a way. And most insurers are getting a lot better about calling their broker when they have a loss as well.
And walking through the actual coverages outside of just the breach response.
Yep, absolutely. So the next slide, this may seem kind of strange if you're a smaller organization, but BCP, DRP, and IRP are all different things. I think a lot of people try to lump them into one document, and they're all meant to do very, very separate things. And they're very important to us. And they're actually becoming very important to regulators now. We have regulators that have asked for a WISP now, just spot on. Not do you have it, but let me see it. Where is it?
What do they stand for?
Yeah.
Tell people what they stand for.
Okay.
Because I don't think they know.
Everybody ready? BCP is business continuity planning. Okay, so that's the long-term overarching, how is your business going to return to where it was before? A DRP is a disaster recovery plan. So that is in the middle of the crisis. How are you going to start from crisis back up to operational? And IRP is an incident response plan that has to do with the breach. How are you going to tell people? That probably includes a media component as well, or it at least should. All of those should have the number for the insurer in them as well, because that's the first call, or one of the first calls you should make. Because one thing that we run into in the insurance industry, people usually go out, they freak out, and they spend a ton of money, and then they come to the insurance company and they go, here are all my bills. Well, it doesn't work that way. We have to be involved as you're incurring those costs. So that's
Please don't do that. I'm going to just back up Peter there. Please don't spend the money on your
That
own.
makes his life just as bad too. So here are just some examples of some of the controls that we're asking about right now. And then obviously the businesses who consider the insurance to be part of their overall IT strategy. Remember, the insurance is not the risk management. That's a different component. The risk management is your behaviors and the processes and policies. The insurance is just a financial mechanism. I'm here to cut the checks for these guys when you're in trouble.
Absolutely. And I think the last point to make on that one, and I'd like the panel's quick thoughts on that before we get into the reputational question piece, would be the physical security piece, the actual physical security of data as opposed to network security of data. Is it, would you say, completely overlooked? Would you say slightly overlooked, or overlooked to a point where it's going to become a huge issue, especially in an economic downturn?
I think it's overlooked because, first of all, a lot of people outsource their data to the cloud, and they don't realize that they have mobile devices that actually have the data on them and rest on a C drive as well, or it's replicated in some way or another. So you're just as vulnerable when you leave a laptop at an airport. Also, I've heard a lot of people say, oh, well, we don't encrypt at rest because who's going to break in and steal a server? People break in and steal servers.
All the time.
That actually happens. And you'd be surprised, too, it'll just literally be a physical key on the lock door. One of the very old agencies that I used to work for, they just locked the server door. There was no electronic code. There was no way to actually get a trail of who was going in and out. And then the server key was thrown into a coffee mug that was inside of the IT bullpen. That was the security, right? I don't work for them anymore.
Yeah, that's that just gave me the chills. So as far as the reputational harm question that came up, it's again, very prescient. Reputational damage is a new and emergent consideration for directors and officers, as well as for lenders, competitors, that kind of thing. So what we're talking about here, and pulling the curtain back a little bit, the Cisco survey, there was also a Forbes survey, there was a Ponemon survey. This is kind of the year 2017 that the understanding of reputational harm really broke. And what you can see there is 22% of breached organizations lost customers. So almost a quarter of all organizations that suffered a breach lost a quantifiable number of customers. 40% of that group, they lost more than 20% of their customer base. That is a significant cost for a mid-level or larger organization. Millions and millions of dollars. Now, what's been happening, and Peter and his crew and some others on the real leading edge thought process around this have worked with us, have worked with John, have worked with Matt in building out algorithms that we can figure out, okay, what does that look like from a quarter over quarter or month over month basis of loss? And were there any other incidents during that time that could have that kind of impact on the net income loss? And if not, then we begin to figure out exactly how many monies were lost over that period of time and seek to reimburse those, of course, excess the retention and those kinds of things. And there's a time period as well where it's a limited, I believe it's 3 months post is the time period. So it's a way to capture that immediate, and that's usually within the first 3 months where you see the biggest drop off. So it's a way to address that emergent threat that is going to be probably the largest monetary driver over the next 5 to 7 years as people begin to understand it more and more.
And I'd like to add on that too. So when the first call goes to, say, John and his team after coordinating with us, one of the things we know is from a reputational harm standpoint, from crisis management, public relations, it becomes exponentially more damaging the longer you wait. And we've seen examples of that. Equifax, unfortunately, is a pretty good one. I don't think the messaging was done properly. Honesty is appreciated up front. Action is appreciated up front. What happens is, unfortunately, a lot of times there's a breach. They don't know the extent of the breach, so they say, oh, we've been breached. We don't know how bad. We're just going to hang out here in limbo for a couple more weeks.
Happens all the time. I know that sounds shocking, but all the time.
It generates an enormous amount of consumer anger, and that's when some of the most serious damage happens. And part of the reason is a lot of these corporations are large, and they don't think they need outside public relations. They have their own internal comms team that handles it, and they think they have it. You'd be shocked at the amount of damage it can cause.
And that applies to IT, to legal. It applies to all of those skill sets. It's the same old thing. If you're a doctor, you're treating yourself.
That's
if
right.
you're a lawyer, you're representing yourself.
Yep. They say something about when you do that.
Yeah. Not a good idea.
And I believe the slide, the next slide that we came to, and I'm just being cognizant of time. I think we've talked about a number of these items, and Peter, your thoughts on that last point about the highlights and how important they are, about what you're doing from an IT standpoint. That's what you're looking for, correct? And differentiators.
So I get on underwriting calls, and I can tell you, we're not necessarily asking about the nitty gritty of like, what type of SIM do you have? But what we are asking is, how often are you checking it? How are you escalating those things? Do you care? Because privacy and security and having a company that is healthy versus one that's, from a data standpoint, is unhygienic, is all about culture. That's what we've been discovering. Have you built privacy into your culture as an organization? Do you care about it? A great example is, a company I know, they started doing key carding, and they said, oh, well, we've done key carding. We're good. We care about privacy. Well, they had no provision for tailgating. And so we decided, to run a test on them. Well, sure, we got a couple of guys in there, and they actually just sat down at workstations and pretended like they worked there, Again, it has to do with conscientiousness. It has to do with, do you have an employee that's willing to stop and say, I haven't seen you before. I'm sorry this is awkward, but can you show me your badge? That's the level of diligence I'm looking for right now.
Excellent. No, that's a good point. And then as far as the cyber factors go on some of the, the more specific drill down piece, and I think it's important to note, and I'd like Peter to give a comment here on this piece. Look, I understand and have been in the cyber, working in the cyber group as this crew has for, well over a decade, and getting, aging myself into the second, and remembering when the Micker reader, in the bank was the big cyber threat from someone coming in and getting a hold of that. And AIG's Protect was the only game in town, and there were, things have changed greatly. And what's important is when you look at the work that IT has to do in the modern organization, I don't care if it's a mid-sized organization, small organization, outsourced IT group, major Fortune 100 company, it is an incredibly difficult job. And it is a job where whoever's trying to get in has to be right once, and you have to be right every single time. That being said, it's important to note that the cyber insurance and cyber services that we're talking about today, that all four of us represent a part of, these are items that are meant to complement IT. They're meant to add another layer of protection to what IT is doing and really backstop the hard work and the money spent and the hours of sweat and tears. And I think that's really important because we add on those pre and post services. It's not just a monetary risk transfer, but it's there to really assist what IT is doing in its mission to make the organization work. And guys, any comments around that? Anything you'd like to add?
What he said, use the services. They're there.
Yes.
Another question right along those lines. So does cyber insurance have the potential to improve the posture of an organization and reduce the incidents?
Most certainly. Most certainly. That's that value add hedge that we talked about, the actual risk hedge from the pre-breach services, the training, the assessments, the updates to specific threats by industry, all the things that that make it a value add along with the risk transfer portion. And I know, Peter, you want to say something as well.
I would add, you've seen sprinklers in buildings. That's because of insurance.
But I am also hearing you say we're not asking about the sin. We're not going into that level of detail. So how do you do that without doing that?
Depends on the organization. So if there's a threat that is going to be significant enough that an underwriter feels, whether it's $1 billion plus organization, $5 billion, whatever the case may be, that if they don't get a good feel for the overall hygiene, then we will most certainly drill down into those very technical questions. Right. But if it's someone who's taken say it's a renewal perhaps, who has actually gone through and done the training, who has had their employees do the quarterly trackable, scorable training, those are the kind of things that bring that hygiene to the organization and are really the sprinklers now in the system. And sometimes they work, sometimes they don't. But that's what makes the risk better and why it's a risk hedge as well as a financial hedge. And guys, I know we're closing up here, and I think it's important to note we've talked about a lot of different threats here to the organization, IT-wise, a lot. This is the first maybe 1.5, version 1, version 1.5 wave of threats. All of these things that we're listing here, whether it be, we talked about earlier this morning about the Blueborn, virus. That's going to be an IoT exposure. We already know what Mireille did last year on an Internet of Things basis. The downstream contractual penalties piece is a big one when it comes to business interruption and the contract credits and everything else that companies are trying to recover and finding that for a majority of forms and a majority of insurance coverages, there's no relief and you're stuck. So there's solutions being built for that. And guys, looking at the rest of them, I'll go down the list here and say which ones do you think are going to be the next big item. We know about industrial control systems and the damage that can happen there. What do you think, John?
I think as sexy as all those things are, the things we listed at the beginning, those four things are still going to be 95% of the problem. So this is all cool and different and new, and I agree. Yep. But hacking and ransomware and rogue employees and that stuff is going to be the issue.
Matt?
I would say the biggest problem we're still currently running into is basic security hygiene on a lot of organizations. As much as I hate to say it, open remote desktop to the internet has probably been the biggest revenue driver for us this year.
Wow. What do you got, Peter?
I would add bodily injury. I wouldn't discount the fact, and we're moving as far as we can and as responsibly as we can with the money we're using, but into bodily injury partially because the inhibition of care from a hospital because they've had a cyber event, because they can't figure out if this person just had fentanyl and whether they can get more fentanyl now because they don't have any data behind those systems. Remember, when hospitals go down, I think the thing that scares me is all of the nursing staff all of a sudden forget how to use pen and paper. Yeah. They forget how to fill out a chart. So that terrifies me, just as a patient.
Yeah, the dependency is paralysis. Well, guys, that's where we come to a conclusion, and I want to thank everyone for your attention. Some great questions. I know we're running into lunch, and I know we've got, and we'd be happy to chat with anybody. Hand out contact info. Yes, sir.
I think it's important to recognize what a great panel this has been.
Oh, thank you. Thank you very much. We appreciate that. Thank you. And guys, our contact information is available here. It'll be available through the organization as well. Any questions that you have at lunch or during the rest of the presentation, I think you can tell we like talking about this stuff, so please. Thanks, you've been great. Thank you very much.